Seminar LP4 Fraud in the Workplace. What is fraud? Financial fraud is an international act of deception that involves any kind of financial transaction used for personal gain. It is the act of taking advantage of another person, situation, or opportunity by false representation. How does fraud victimize the company? The opportunities for fraud in the business workplace are plenty. The Association of Certified Fraud Examiners, the ACFE, 2010 report to the nations on occupational fraud and abuse estimates global losses due to fraud at $2.9 billion. The ACFE state that small companies are more susceptible to fraud schemes than larger organizations. The effects of fraud, cost of fraud to organizations can be huge. The losses incurred by acts of fraud committed against fraud decreases a company's income on a dollar-to-dollar basis, thereby decreasing the company's net income. Since the net income of the company is decreased by fraud, the company must generate more revenue in order to recover the effects of the fraud. For example, if a company has a 10% profit margin and manufactures golf clubs and sells them for $300 a set, the company suffered a $1 million fraud loss, the company would have to increase revenues by $10 million or sell 3,333 more sets of clubs. What are the different types of corporate or occupational fraud? Corporate or occupational fraud can be divided into two groups: acts that are committed against an organization and acts committed on behalf of the organization. The three categories of fraud, according to the Association of Certified Fraud Examiners, are asset misappropriation, misuse of one's position, and falsifying records. Fraud organization is the victim. Employee embezzlement. Types of fraud with organization is the victim are employee embezzlement, vendor fraud, customer fraud. Employee embezzlement is when the employee steals the company's asset either by taking it directly or reverts the asset to where it ends up in the hands of the employee. An example of this type of fraud is an employee creates a fake invoice ordering parts for plant equipment, but the actual payment of the part is sent to the employee. Another way an employee embezzles is by taking bribes or kickbacks from a third party. This occurs when the employee accepts a lower sales price or pays more for a product or service. Vendor fraud is committed when the vendor, whether acting alone or through collusion between the buyer and the vendor, results in an overcharge for purchased goods or a shipment of inferior goods was received or a payment of goods were intentionally never shipped or was shorted. The City of New York Department of Investigation probe in 2012 led to a contractor in the city time case to agree to repay $500 million in a criminal investigation that led to 11 individuals being charged and freezing of $50 million in assets. Customer fraud happens when the customer either gets something for free by illegal means or they don't pay for something received. For example, the customer purchased services using a credit card and then evades the liability of the charges by contacting the credit card company denying responsibility for the charge. Management or financial statement fraud. Management or financial statement fraud occurs when the top management manipulates the financial statement to hide liabilities or embellish assets or revenues. The Enron scandal revealed that the top management was falsifying financial statements and creating situations by creating power outages to drive the demand of utilities up to increase the selling price. With the outcome of the Enron scandal, the Sarbanes-Oxley Act 2002, or what we refer to commonly as SOX, was created. SOX brought about major changes in the regulation of corporate governance and financial practice. Investment scams and other consumer frauds. Ponzi schemes, which are designed to pay victims interest from investments of subsequent investors. Telemarketing fraud puts pressure on victims to send money or give personal information to unknown callers. Nigerian letter and money scams send emails to victims asking for a fee to be paid up front in exchange for a large payout from another country. Identity theft occurs when someone steals personal information from another person. and purchases goods or services using that information to represent the other person. Advance fee scam happens when a victim pays upfront for goods or services that never take place or received. Redemption, strawman, bond fraud occurs when perpetrators sell expensive training kits to victims who are tricked into believing the U.S. government controls certain bank accounts that require filling out complex paperwork and charge additional fees, and the victim cannot access the funds. Letter of credit fraud is when fake letters of credit are sold to the victim to use as investments promising to pay unrealistic returns. Internet fraud encompasses all types of fraud just done through the internet. There might be different types of motivating factors that play into why people commit fraud, but the underlying reason is to receive a personal gain. Whether or not it is driven entirely by greed, as stated by Gordon Gekko in the 1997 movie Wall Street. Hopefully you've all seen this. Greed, for lack of a better word, is good. Greed is right. Greed works. Greed clarifies, cuts through, and captures the essence of the evolutionary spirit. Greed in all of its forms, greed for life, for money, for love, knowledge has marked the upward surge of mankind. It's a rough statement. The fraud triangle consists of three elements: incentives, pressures, opportunities, and rationalizations. Incentives and pressures such as financial, biases, work-related, or a desire for material possessions are types of motivating factors that typically arise from non-shareable problems. The inability to share problems with others contributes to the offender in behaving illegitimately, solving their problems. So, for instance, if uh, someone has some kind of financial problems that where they might have they might have a gambling problem, that would be a vice that would cause the financial issue. So they can't keep up with their mortgage payments because they're spending too much money gambling. This could cause, be an incentive or put pressure on that individual. Opportunities arise from the lack of internal controls. The greater the opportunity to circumvent controls, the more likely fraud will occur. Although strong internal controls can decrease the opportunity for fraud, it does not eliminate the possibility of fraud. Those people that are really motivated work a little harder and longer to accomplish the act. So you have to safeguard your assets. Leaving cash laying around is an opportunity waiting to happen. Rationalization. Attitudes and rationalizations are common with employees who are unhappy or dissatisfied with the company and or its treatment of employees. Usually these employees rationalize that they are entitled or that management owes them because of their hard work of years of service. Attitude plays a big role in an employee's disregard of monitoring or reducing risk. Everyone is capable of committing fraud. It always comes as a surprise to those that work or live around someone to find out that a certain individual has committed fraud. However, there are certain behavioral elements of individuals who commit white-collar frauds. Lack of moral compass that establishes a certain lifestyle, such as careless spending or salacious conduct. Troubling relationships with friends and family that include employees with needy personalities who are willing to protect the individual committing the fraud. Deception and cover-up are hallmark traits of white-collar crime. Using words such as "they are the team" instead of "I" are fantastic instead of "good" can be a clue to a cover-up to hide poor performance. Arrogance, grown out of pride and confidence that allows an individual to feel superior and entitled. Cleverness and creativity are elements that can make many people successful. It can also tempt them to be dishonest and unethical. Your assignment: create an employee handbook or pamphlet on fraud awareness. This should be approximately 2 pages. Ensure you include, but you are not limited to, the following headers. And focus on the headers and then creating the headers, and then focus on that header in order to write the pamphlet. It will be much easier. So you're going to have the introduction of fraud, the fraud triangle, and the 3 elements. You want to discuss that a little bit. The different types of fraud. And you don't have to use what I have in here. I want you to go out and I want you to put together your own material that is going to be that will work with your company that you are marketing now for the class. So whistleblowing, the steps to take if employees are aware of fraud, penalties for employees' involvement in fraud, and any other category of fraud that would apply to your business. So gear this specifically to your business, and if you know, this is your business, so what do you want your employees to know about fraud?